Welcome to all the panelists and welcome to all the guests here. It is often said that real estate is a key driver for economic growth. And I believe you are all drivers in that sense. You're all driving the economy. But we also know that when you're driving, you should be careful. There's so many things on the way that can hinder your drive. You want to reach your destination, but you want to do it without harming anybody else or yourself. In fact, that's what we're talking about here. We are talking about driving towards sustainability, driving towards success of your projects, and the fuel for this drive is finance. And we need to do it in a way that is not harming anyone, not harming yourself in the long run as well. And unlike the regular fuel, which is right now in short supply because of the political situations, climate finance is not really facing that issue. It is in fact growing. And there's a lot more coming, provided all the right criteria is met. So today we're going to talk about climate finance, the applicability, what really is the criteria for accessing climate finance, have some great examples, and get some global perspective from our guest, Sean and Eleni, who are joining from there. So what I'll do is very briefly introduce each guest, and then at the end of all the introductions, I'll ask you to talk about one most exciting opportunity or achievement as it relates to green finance or green buildings, green construction that you're working on now. So I'll start with Sanjay. Sanjay Dutt is the MD and CEO of Tata Realty and Tata Housing, one of the premier developers, and currently managing a portfolio of, if I'm not mistaken, 37 million square feet across multiple sectors. So maybe Sanjay, why don't you share one exciting opportunity or achievement of Tata Realty?
Thank you very much. Exactly a decade ago, most of the developers realized that it's very important to build strong credit rating and also, manage finances smartly. So if you don't, then you go belly up. And what we see now, and this is what we think Tata Realty and Infrastructure Limited and Tata Housing has achieved, is on the sustainability angle. Now, we've been discussing sustainability for a very long time, but to be able to get our Chennai Ramanujam Intellion Park as India's first net carbon zero and 100% renewable energy was a major accomplishment for us. And on the back of it, we were able to lease nearly 100% in a very difficult environment after COVID, when the office take-up was so slow to proceed, especially in the SEZ. Since then, all of our assets in commercial are International Finance Corporation EDGE Advanced Program, which led to 1,200 crores of green financing. Tata Realty doesn't need much help on financing, but when you exhaust so many lines because we have a lot of group exposure with various banks and institutions, it is always a good idea to have an alternate financing strategy. And I think we were very grateful that International Finance Corporation came to our assistance and we raised capital, and we're looking forward to doing more. There is no incentive on the residential side from the demands perspective to have green and sustainable homes, but it's the largest segment polluting the environment. And it is my suggestion and recommendation to the entire community that I think we should take residential green certification and sustainable homes equally seriously, because when the laws change, you'll be caught by surprise. And if you're not doing it already, it will impact your business. So my quick take on that.
Thanks, Sanjay. Next, I'll request Anjali. Anjali is the principal advisor of special projects, and we know you're working on a very special project right now. So maybe if you can talk about that or any other exciting opportunity that you
Thanks,
see.
Sotif. So just to recap, HDFC Capital Advisors is an alternative investment fund focused on financing the development of affordable and mid-income housing. Now, what was exciting? Well, Sotif, this is again the partnership that we had with IFC. So in August 2025, we launched what is called as the HDFC Dream Fund with IFC as the anchor investor. And IFC has said that this fund is the first private credit fund focused on green, affordable, and mid-income housing. So the question is, what does it take to meet these criteria as far as the green is concerned? All our investee companies in this fund mandatorily needs to demonstrate a 20% saving in each of the categories of energy, water, and embodied carbon in construction materials. Why is 20% sacrosanct? The thing is, under the IFC EDGE green rating framework, the 20% threshold was perhaps designed to ensure that the incremental construction costs were not onerous. So it's a good starting point for everybody who's looking at a green framework. Just to reiterate that recent studies have shown that the incremental construction cost per square foot to make this 20% savings across all these three verticals of energy, efficiency, water, and materials is only 2 to 3% of incremental costs per square foot. So this number is coming down increasingly. Our ask really on the ESG front isn't so much about the certification, but being able to partner with developers to develop this ecosystem. Because at the end of the day, if you embed sustainability, if you embed risk management, and if you embed ethical considerations at the planning, design, and construction and execution stage, you're creating long-term value. And if you look at long-term value, if you look at reduced costs over the operational costs over a longer period of time, and if you look at risk management, you've enhanced your asset value. It's plain economics. It's not a new gen issue. It's a here and now issue. And look at ESG from an economic lens. Thank you.
Thanks, Anjali. And request Parag. Parag Thalli is the Senior VP and Real Economy Group Head at Axis Bank. So Parag, why don't you share your perspective on this?
Yeah, so taking a step back, one revelation for me was when we had funded a slightly dated commercial asset with the thesis. It was a buyout fund. Thesis was on certification enhancement, and the logic was that rental uptick. While we were healthily skeptical, but we saw that within 2 years, as the certification enhancement jumped from LEEDs Gold to LEEDs Platinum, there was an actual rental uptick by almost 20%, outbeating the micro market. So I think in commercial office, the ESG, as my fellow panelists just mentioned, is no longer a good, it's a must-have, right? And it is clearly demand-led. From that perspective, residential, rather than being a good-to-have, I think from a lender perspective, we are probably 2 to 3 years away from this being a necessary risk metric, not something which is good to have in your projects. Because when we are thinking of projects and funding being 15 years out, and the situation where we are in, we think we are in an energy pincer, right? There is a demand, shortage creeping up. And with AI, there is a supply shortage on one side, and there is probably going to be a demand uptick, which is not, factored in from as the AI in our country scales up. Hopefully it scales up faster with the situation in West Asia. So energy conservation is no longer going to be optional, and I don't think lenders are going to look at ESG as a good to have. It's probably going to be must have in the next 2 to 3 years.
Great. Thanks, Parag. Ramtej Bolisetti, you're an investment manager and ESG officer at Sundaram Alternates. What's the most exciting thing you're working on?
Thank you. So to set the context, Sundaram Alternate Assets is a platform alternate investment manager of the Sundaram Finance Group. Right, so we are essentially a private credit investor focused on residential real estate market. We've deployed close to around 6,000 crores over the last couple of years in the southern and western markets. So we started integrating ESG and sustainability frameworks into our underwriting very early on. And as a result, we have a portfolio of close to 10 million square feet of certified green projects, mostly IFC Edge. And we have a pipeline of 15 million square feet of projects that are coming up, which are going to be certified. So the most exciting part about sustainability is the kind of conversations that we are having with the developers. Compared to 2-3 years ago when we started the conversations, there was a lot of resistance with the developers. So it has taken a constant engagement with every level of the, engagement at every level of the company to see the outcomes coming through right now. So that's one exciting thing. And on the back of what we've achieved, we've also managed to raise 2,500 crores for a dedicated strategy, which will deploy capital into green projects, backed by IFC Edge framework. So that's very exciting for us.
Wonderful, thanks. And I'm sure a lot of people will have questions. We'll keep some time at the end for Q&A. But let me move to Eleni. Eleni Policronadio, you are the co-founder and CEO of Sintali, a global certifier of green assets. Could you share your most exciting opportunity or achievement so far?
Absolutely. First of all, thank you very much for the invitation, and I'm sorry not to be there in person. I do have my colleague Man Gandhi's in the audience there, but it's a pleasure to join you online. So as Udhav mentioned, we are a global certifier, so we stand as the bridge between developers and lenders, making sure that those green claims are verified and assured, and we're one of the global certifiers for Edge. And I think, one of the most exciting things from my side is actually, I'm going to challenge the panel a little bit in that I think residential is actually getting further along than we think historically. And a big transition has been moving away from seeing sustainability, green and ESG as part of corporate social responsibility and seeing it more as something that must be done and actually seeing it as a business case. And I'm really happy actually to hear some of the panelists talk about risk, talk about longevity, talk about asset value and performance. But I think one of the most exciting things we're seeing with our clients around the world, and I'm very honored to have some of our clients on this panel talking about this, but it's really seeing that sustainability is actually adding value to the end tenants. It's adding value to the business. It's actually a good business case, and finance is supporting that. It is not driving that. And I think that's been really exciting to see around the world, in India, but beyond, that really the ability to integrate sustainability is making a stronger business case and is making the real estate companies much, much stronger.
Thanks, Eleni. And finally, Sean Kidney, co-founder and CEO at the Climate Bonds Initiative. An expert in sustainability finance, and he is working on mobilizing global capital for climate. Sean, would you like to share your exciting opportunity?
Sure. Look, it's the background. The sustainable debt market, which is a slice of the overall financing market. We've heard tonight about loans and private credit and so on, but let's just call it the bond market, is something that's grown from nothing to now 700,000 crore globally as a market. The Indian component is 46,000 crore. It's huge. The green property side of that element is in India way below what it is in other countries as a share of that market. Globally, demand for these instruments continues to be extraordinarily strong. And the more we grow, the more investors pile in. Oversubscription is the norm. Good rates are the norm. And certainly, Indian companies that have gone overseas, from State Bank to Renew to Indian Railways, have got significant improvements. Not enough to make a difference to the financing of a vast estate in Mumbai, but enough to make a treasurer very, very happy in terms of their pricing and greenium. And then we've seen a bit of that, as we call it, a greenium in the Indian market when the sovereign bond green bond was done, where we saw the government get a 6 basis points benefit for the green bond. But, you know, for most treasurers and for people who are trying to raise money in debt markets, with refi or other sorts of finance, this is a way of establishing deeper relationships with investors. The feature of sustainable finance is stickiness. That is, investor being locked on and wanting to participate in long-term investments. And that's the big advantage we're saying. And of course, we have around the table a couple of issuers of green bonds in this particular space also. So globally, there's an issue about the definition of green buildings. Look, that's been covered, you know. Eleni's talked a little bit about that. We work with EDGE, we work with the Indian Green Building Council, we work with the US LEED program, BRE in England, etc., looking for relevant metrics within those schemes that will meet global investor appetite for climate investments. We've also had this being built into what we call national taxonomies of sustainable finance in 60 countries around the world. India, soon to be the 61st country, with its national taxonomy of sustainable finance, which will reflect, if you like, guidance to investors and the industry what to do and the kind of metrics that can be used. That side of it's becoming clearer and easier. I mean, I think we need to do more work to reduce the cost of transaction, but that's okay. That's an engineering job. I'm just going to say investors love this stuff. Why? Because most institutional investors, the top of the food chain that drives the rest of the whole financial markets, have an anxiety about long-term risks to their portfolios. We've heard a little bit about that today. And also, they see that green buildings, certainly in the commercial space, perform better. But for portfolios of green buildings, certainly around the world, tend to have higher tenancy rates nowadays. There's been especially pronounced post-COVID, and have longer-term results. And from an investor perspective also, now we're seeing an appreciation that buildings that are green, resilient, have better heat management, have better energy and water systems, are also lower default risk, that they're going to be able to survive the kind of shocks that we're starting to get globally, heat shocks, droughts, worse monsoons, etc. If you anticipate the future issues, you are likely to be seen as a better investment by investors that are becoming more cognizant of these. And also banks. You know, Reserve Bank of India has been pushing climate stress testing for banks in India, which has meant that banks have started thinking about how do we understand our mortgage portfolios? How do we understand our commercial building portfolios in the context of the likely impacts of climate policy and climate change impacts? And what are low risk and high risk? That drives demand. So there's something amazing happening here. Around the world, we've got about $500 billion worth of green property bonds. There are a bunch, half a dozen or 8 in India that feature green property. It should be 80, it should be frankly 800. Of course, the bond market generally is relatively small in India compared to other markets, but we need to make sure that's green. But the loan market, which is often linked to the bond market, if a bank like Axis Bank can refinance a green loan portfolio in the bond market, that gives them an extra incentive to promote greener. All instruments are shifting towards being future fit, which is essentially climate related or green related. And that's from a developer's perspective, it's going to mean greater access to capital, increasingly preferential access to capital. And it's going to mean if you're able to take advantage of some of the market dynamics going on, it'll mean shaving the cost of capital, which when you're borrowing large sums, like a large developer, becomes really material. But stickiness, loyalty of investors is the prize here, is the prize for any treasurer. If you can make that work, then you're going to be able to make it much easier to raise capital for the next issue, the next project, the next project, the next project, etc. That's why people should look at this. If you can, you should. If you can't,
Sean, sorry to
missing
interrupt. I'll come back to you for more details. But let's just wrap up this round, and I'll take the opportunity to introduce my organization as well, working with International Finance Corporation as the Green Building Lead, where we are part of the World Bank Group, focusing on the private sector primarily, and our primary focus in real estate is right now on sustainable real estate. And we are supporting or catalyzing the growth of sustainable real estate by providing direct finance to developers also indirect finance to financial institutions like Axis Bank and HDFC Capital. And lastly, on setting up standards on what exactly is green or climate or even resilience now through our certification program, which is EDGE. And we've seen growth in all three, over $3 billion of investment over the last decade in green real estate in India. A lot of it has gone into affordable housing, where very few are investing. And in terms of certification growth, also with EDGE, we've seen close to 160 million square feet of floor space that has been certified. So we're very happy to have this expert panel with a lot of diverse views here. And Sean, I'll come back to you on one question. So you mentioned the dramatic growth in the global bond market, the green bond market. What has driven the growth? What has been the catalyst for that? If you could just maybe take a minute to show some light on that.
So there are two catalysts. The first catalyst, which got us going, increased demand, was an appreciation amongst global investors and large investors, including people like Life Insurance Corporation of India and ICICI Asset Management and so on, ICICI Asset Management, that climate is a material issue going forward. Sometimes it's a policy risk, sometimes it's an impact risk, but whatever, there's an issue. You give them two chances to invest, one of which addresses that forward risk, people are very, very happy. And that's exactly what's going on. Since then, we've also had secondary market dynamics. So with the carve out of secondary market of green instruments, as we've had liquidity trading, we've also seen differential performance. So every time there's a downturn in the bond market, everywhere around the world, green bonds hold their value. That makes them a gold dust value retention product. And as you would know, Larry Fink, the head of BlackRock, once said he didn't make money by giving his investors yield. He made money by making sure his investors didn't lose money. Green bonds are a superior value retention product in the portfolio. Those two things have driven demand, and that's why we continue to get oversubscription. If you can meet the eligible criteria for those investors looking for this kind of stuff, this is a fantastic opportunity for developers and banks.
Thanks. And talking about eligibility criteria, I'll come to Eleni. From a verification standpoint, what is the criteria that global markets investors are looking at right now?
Absolutely. I mean, I think we've kind of alluded to it, but when you think about what global capital markets are asking for, what does green mean? Green is looking at performance and risk, right? So we're talking about a lender is looking for credible, measurable, verifiable performance to help manage what they're investing in that risk in the long term. So what that translates to in terms of criteria is quite simple. It's, does this asset meet the threshold of green? And Sean mentioned there's many definitions of green, but in our case, we typically use the IFC World Bank definition, which is it has to be quantified, it has to have at least a 20% performance improvement over the baseline, needs to be independently verified. So pretty basic things that are easily observed and measured and verified. So we're looking at, does it meet the green criteria? Is it independently verified? Because no matter how trustworthy you are as an individual, as an organization, it doesn't matter. If you say that you're the best, someone else has to provide that independent opinion. And the third is about the data. So yes, great, we're saying this is green, but what does that mean? How is that quantified in terms of impact, in terms of carbon emissions, in terms of water usage? How can you put that in clear numbers that can be compared across different asset classes, across different developers? So that's really what lenders are looking for, and that's why EDGE has been so successful in India so far. It's because it's broken those elements down and created a process through which developers and lenders are able to speak the same language, which is often quite challenging because, of course, financiers are looking at it from one perspective, developers are looking at it from another. So creating that common language and understanding of what green is, what is the performance, what's the risk profile of this asset, and making sure that lenders and developers are understanding and speaking the same language.
Great. Thanks. So what I get from you is quantification of impact of savings and independent verification. Those are the two most critical elements. Thanks. I'll move over to Sanjay from a developer's perspective, and one of the leading developers who's constructed, as you mentioned, some really interesting properties, really sustainable properties. What change have you seen in the market over the last decade or so? And has that impacted your business? Is sustainability become the mainstream, or is it still a niche?
Is absolutely mainstream. To simplify, the asset value that we had envisaged of one of the green asset was 5,900 crores. The offer that we got from an investor was 6,900 crores. Does it convey the message? The IFC certification was so powerful that there was a spike of 1,000 crores in valuation. And by the way, self-initiated, not proposed by us. It was self-initiated, so it was very powerful. I think overall, there is high-performance culture. Let's say 300 million square feet is now with REITs. What is the REIT manager thinking right now? The REIT manager has a 300 million square feet portfolio across 4 or 5 REITs, and they want to enhance the value for the shareholders. They want to make these assets more competitive. They have to repurpose and make it competitive with the new generation of commercial assets which are coming into the country, right? So everybody is focused on high performance, and high performance will not necessarily be only limited to green. There are many other aspects which will be like green and trends. For example, wellness is one area which Tata Realty Infrastructure has embarked on. How do we monitor the health of the people when they occupy? It sounds very different as a concept, but we were just discussing one of the companies has about 7,000 employees in the Middle East, and there's an anxiety about job losses, there's an anxiety about fear. How do we address that? So the infrastructure that we're providing in the assets and the engagement that we do through social and cultural activities with the people is beyond real estate. It's basically human engagement. So I think the world is moving in a very different direction, and we need to make sure that we update. And sustainability is the basic. You will not even qualify if a global occupier wants to be in your property. Your property will not be even shortlisted if you're not green.
Did you have to make any changes in the way Tata Realty works, the processes, or even building design in order to qualify for climate finance?
It starts from something as basic as location studies. So, you've seen in the country, there's a lot of metro infrastructure that has come up, and that reduces, we do an average park of about 4 million square feet, which means 50,000 employees come to a property every day, right? Now, if you find a location which has metro and highway and railway connectivity, you can reduce that carbon footprint of commuting, which we all know is a nightmare in every major city across the country. Then you have the aspect of design. I think a lot of sustainability, forget about construction, starts with the design and orientation of the building to protect your development from the heat waves it causes in certain seasons of the year. So if you got that right, and then comes the materials that you use, which definitely impact. We use steel, we use cement, and we use primitive method of construction, which impacts the environment substantially. So it goes there, and the journey continues all the way, eventually how you manage the asset. We just gone for district cooling. It reduces 30% energy consumption. So it benefits commercially, but also reduces the impact. So I think this is a journey at every stage that you need to look into.
Fantastic. Great. Let's move over to our lenders and investors. And I have one question common to all three of you. There's a lot of uncertainty or myth or confusion about climate finance. How do you get it? What is the practical change that a developer has to make? What is the requirement and what is the documentation? Is it a lot of work? So if you could talk about, maybe starting with Anjali, if you could talk about what are the practical implications for a developer, let's say sitting in this room, who wants to access funds from your green fund?
Thank you. So far what we've seen on the green building side is that there's been a lot more of funding that has been available on the demand side. So you've seen banks, you've seen housing finance companies now on lending for green housing. But the real problem lies on the supply side. So if that is the one that we need to tackle, my advice, especially to all the developers here today, is look at a green rating system early in the day, at the time when you're designing, at the time when you are at inception of the project. Because if it becomes an afterthought, it becomes that much harder to have data-driven verification happening. Secondly, do not expect any discounts, because the reality in India is that the greenium, which is a discount if you do green lending, or really does not exist. But understand that once you mainstream the green finance framework and integrate it, you will get the economic benefits over the longer term. Thank you.
I would suggest that, this, again, doing a comparison to the office market, considering that the demand has led to a transition. It is not economic incentives or financial incentives, because that can only, nudge to a point. And as, was just mentioned, there is no discounted financing available to Indian institutional lenders for us to be able to pass it on beyond a particular point. So, to draw a parallel to residential, I guess it would be too difficult to expect individual developers to go in and take an effort. My suggestion would be for an industry body perhaps to take a lead, because if you have to influence demand, I think there is willingness among consumers to pay for a resilient property, considering it is going to be their single biggest economic investment they are going to make in their lifetime, and considering, how the next 2 decades are going to. So the education awareness to bring this change in the residential, as has happened in commercial, maybe would need to be a collective effort rather than an individual effort. That is where, bodies such as NAREDCO could play a role.
Very quickly, I feel, complementing what you just said, I think the regulatory environment will compel residential developers to ensure that this happens. So while demand, as you rightly said, is weak there, and which body should self-initiate, I think the government will come very strongly, because air quality, water, all the natural resources are under pressure, and you should not be caught surprised that this is being implemented by the government. So I would definitely want developers to look at it. Yeah, good point.
I'll just make one more point. As Sean mentioned, RBI is already requiring banks to stress test for climate. Right now it is trials. In a couple of years it is going to be mandatory. So just to complementing, and when the stress testing happens, green and sustainable certifications will probably be a mandatory requirement for projects to be funded. It won't no longer be discretionary. So better to start preparing early.
Wonderful. Thanks. And we also know that bodies like National Housing Bank are looking at this very seriously. They're coming up with a green line of funds and asking the housing finance companies to kind of push the green agenda further.
Just one point. There is no denying that a green building has lower operating and maintenance costs, and that is going to be a consumer preference.
Anjali, while you have the mic, maybe because you have experience from HDFC Bank as well, how important is mortgage market to drive the demand, drive the developers to build more green?
Right, so that's what I mentioned earlier also, Atif, is that while the focus has so far been on the demand side, where green mortgages do help, they're not necessarily always at a concessional rate. If the lender has got money at a concessional rate, they are able to pass that forward. But the real requirement, Atif, is looking at the supply side. And that's the audience that we have captive over here to accelerate, in the words of NAREDCO, to be able to begin to embrace the economics of a green building.
Fantastic. Ramtej, over to you. Your perspective on practical aspects for a developer.
So adding to Anjali's point, actually it's very difficult for consumers to pay for green right now. In a commercial, it's much easier because the lessee demands it. To drive this value to a end user is very difficult in our experience. So what is actually even necessary in our experience is that developers fail to communicate the value of this green building to end users. And this happens because, there's the lack of engagement between the sales team, the construction team, the site team, and so on, right? So it's important that this value kind of comes out in marketing materials and so on. Now, how we evaluate sustainability is, we've been doing this for a while. So our framework hinges on two things. For real estate, we've kind of defined sustainability. So E and S of ESG is super material in real estate sector, right? So we use essentially two tools to tackle this. One, we mandate all the projects that we invest in to be green building certified. It could be IGBC, it could be EDGE. So this automatically takes care of the energy savings and resource efficiencies in the project, right? So that's one angle to it. The second part of it is we do a third-party audit of ESGDD at the project site. Now this highlights, there are 100 parameters that we kind of track at a project site, such as how is the waste being managed? Are there dust control measures at the site? What about safety parameters being followed at the site level? What are the living conditions of the workers at the site? So all of this is kind of fed into a scorecard, and we get a baseline assessment, post which we engage with the developer to kind of improve on what is missing or what is lacking in the assessment. So these are the two ways where we found out that it's very implementable and it actually shows difference on the ground.
Thanks. I want to go to Sean now. Sean, we talked about the demand side a little bit here. Are there any examples that you would like to share with the audience here on increasing customer demand, the end customer demand for more sustainable properties that you think has really worked?
Look, my area of work is on capital raising. If you're not capital raising, I can't offer a lot of things, but a couple of stories. Barclays in the UK, in this case, when they issued their first green bonds, where they were refinancing a portfolio of mortgages, in that case. Green mortgages are very sort. You've heard a discussion tonight about the kind of criteria, which is, we are doing global harmonised approaches, by the way, to what qualifies as a green mortgage or a green commercial building. They were so happy with the interest rate they got and the investor demand, they then moved to offer discounted mortgages to mortgages that would qualify for the green bond issuance. They offered, I think, a 25 basis point reduction in rates, which was a way of incentivising homeowners to make sure their properties qualified, if you like. Now, that also meant, by the way, they introduced a scheme where they could borrow a bit extra to achieve the target. So if they borrowed the extra, got the 25 basis point, the numbers worked that much the same, etc. That was one product example. Another product example is in Australia, where the Commonwealth Australia Bank have been promoting green mortgages. They had a particular carve-out program where the qualification for a green building was it had 5 megawatts of solar on the roof. And, if you look at our primary concern in terms of green building is around the emissions performance, but we're now getting more stuff around resilience coming in. There's new rule sets coming in. But in that particular case, Commonwealth Australia Bank ran a very successful program of encouraging people to upgrade their solar or put solar on the roof, and in return they got access to a discounted mortgage program. Now, I think currently a third of all Australian homes have solar on the roof, and this has been one of the factors that really helped that. If you're doing a green building in Chennai, having adequate solar on the roof is a critical part of it. I mean, of course, now we need to make sure we can manage heat as well. There are other issues, but that's a starting point, right? So there's lots of things we can do here. from Commonwealth Australia Bank's point of view, they felt that a house that had adequate solar on the roof was also going to be able to better weather ups and downs of energy prices. We're seeing spikes in electricity prices globally in Europe and in Australia and so on at the moment. It's crazy. Prices are going way up, as is petrol prices, because the Straits of Hormuz. So in other words, these were lower default risk homes because the electricity generated on the roof, and that helped them with their internal argument. The third approach we're seeing is where in Hungary, the regulator, the central bank, decided that green mortgages were better investments for the kind of risk reasons we talked about, climate stress testing on the portfolio of banks. They provide an incentive, differential risk weighting calculation, if you hold green residential mortgages. That led to a spate of banks in Hungary issuing green property bonds against packages of green mortgages and then providing incentives for ordinary householders. There's a lot of different ways this is happening around the world, and we're going to see a lot more of it. I think some of the other speakers have made very clear the direction of travel is very clear. When the Reserve Bank of India is concerned about stress testing bank portfolios and beginning to bring in those kinds of tests, property is the biggest asset class for most banks and so on, then that's filtering down through the system. If you're a developer and you can make sure that you position yourself in the middle of that change in approach to risk in the financial sector, it's going to be easier to raise capital. And that's certainly the experience we're seeing in California, in France, in Australia, in South Africa, where this has already been happening, in China, where we're seeing this happening as well. There's going to be a lot of opportunities here.
Wonderful. Thanks, Sean. Eleni, I know there might be a lot of developers in the room here who are thinking, is this for me? Do I take the plunge now? What do I have to do? And does it really benefit me? So maybe from your global experience, if you could share any example of a portfolio of a developer who's really adopted or embraced sustainability and benefited from it.
Absolutely. I have so many, so I will try and keep this short. I think there's a million commercial examples, but I think the real crux of our conversation today is how do you actually see that in a residential example? So I've got 3 examples for you in residential around the world that hopefully demonstrate that this is not just a conversation for commercial assets, but also for residential. My first and my favorite is an organization called Baldwin Properties in South Africa. Now, Baldwin was already designing green and they were doing EDGE certification, but they realized that a way in which they could add more value to their customers is helping their customers get cheaper financing. So they built a pipeline of EDGE certified homes, and then they negotiated a deal with a local bank, Absa Bank, so that the bank was offering a green mortgage to their customers with a reduced interest rate of around 0.25% and a cash rebate of up to 3%. Now, that particular offer doesn't go through the entire tenor of the loan, but it's enough to show value to the customer that, hey, you get a green home and you get a better finance rate up front. And I think what's really interesting in that is that the developer didn't get any kind of incentive or wasn't looking for anything specific for their own financing. But what were they doing? They were improving the value of what they were offering to their customer. They were thinking about how can we sell more? How can we create demand? Well, you create demand by creating homes that are an absolute no-brainer for the end tenant. You get homes with lower utility bills. You get homes with low utility bills and lower finance. Why would someone say no? And I think that's so important when we're talking about the residential market. It's not about getting rebates and getting these greeniums, because even if they exist today, they're not going to exist forever, right? We can't expect a financial market to offer an incentive forever for shifting green. What we're going to start to see is a penalization, so a higher cost of financing when it's not green. So let's not build entire businesses dependent on an incentive that will go away. Instead, let's build residential businesses or any kind of development business where you're providing so much value to your end client that it's a no-brainer to say no. And so much of that is around the design decisions. Anjali mentioned that. If you do it up front, your incremental cost is so low that it's not a problem. You're not increasing your capex. You're simply creating better buildings. You're creating better developments, better offers, so the customer will naturally want it. That's what demand creation is. We can't expect end customers to suddenly want green for the sake of green. It still has to make sense for them. It's their home. It's where they live. So bringing that all together is critical. And there are other examples. We've got a client in Colombia, Constructora Bolivar. They restructured their organization to basically integrate sustainability as a design machine on the inside. Their entire design team is trained on how to use Edge. All of their designs have integrated Edge, which means their incremental costs are really low. And they've got over 60 residential projects that have gone through the Edge certification. They've tied it into their green construction loans. Their clients get green mortgages, but they're not doing it to access finance. They're doing it because it makes business sense, because they're able to tap into their customer demand, and they're also able to get the business benefit of accessing green finance. So I think this is so key when we're talking about the residential sector. We're not talking about developers increasing their capex exponentially and then using the finance to basically balance that out. We're talking about businesses that have reshifted their businesses and made this part of their business strategy and provided better value for their end clients, to really create the demand, to increase their sales, to facilitate the velocity of their sales. And then they use finance as a way to supplement that, as a way to just continue to build. And I think Sanjay made a great example about diversification of finance. Sean mentioned loyalty of finance, right? There's other reasons to build those relationships with the finance world beyond just expecting an incentive that suddenly is going to make a business case for you.
Thanks, Eleni. You talked about doing the right things and then communicating to the customers, to the end clients as well. But what about if somebody is not really doing the right things, but still communicating that they are? Greenwashing, how prevalent is that and how problematic is it?
Very problematic, I would say. And unfortunately, probably a little bit more prevalent than we would like to see. There's a lot of people that claim to be doing green, that self-certify or that, put out all kinds of claims without going through due process. That creates risk for the organization themselves in terms of their credibility in their market and their credibility with investors, and of course creates huge risk for any lender that is investing for capital misallocation and for their own risk of default. So in terms of the prevalence, definitely higher than we would like, but there are some very easy solutions as to how do you get through that, and that's really using internationally recognized systems, benchmark systems like Edge, and making sure there's independent verification. And most important of all, which seems quite small, but it's probably the single most important thing, independent site visits. So not only having desk-based assessments and things that are happening online, but actually having independent auditors being able to go on site and actually check. And unfortunately, we've had some situations where we've gotten a whole bunch of documentation as certifiers that show one thing, and then you go on the site and you realize that that wasn't quite correct, which is why site audits exist and why it's such an important process in terms of the verification and assurance.
Thanks. Well said. So now we have reached the end of our time, so I'll just ask all the panelists to take 15 seconds to give one advice to either a developer or an investor sitting in this room or connected virtually on what should they do to increase the uptake of green finance or green buildings. So starting with Sanjay.
I feel the developer community has to invest more in technology and new construction methods because that has a larger impact and instant result. That's one area I would focus on.
Thanks.
Pick a green finance framework that is simple to understand, that can handhold you through the process. And as developers, you will realize that just a few tweaks can really make you get the initial green rating right away. Thank you.
Thanks. Parag?
I would think make it core to your planning process and make it recurrent in, have ownership within the organization, have someone take ownership within the organization of it and ensure it is a distinct project stream and a recurrent.
Tej?
I think more and more capital will kind of start flowing into sustainable projects. So For anyone who's looking to start their sustainability journey, I think it's recommended that you get your projects edge assessed. It's literally free of cost, and it'll give you a lot of information you need to act upon, right?
Thanks. Sure.
Very quickly, I also chair Asia for RICS, which is evaluation standards. And I think organizations like RICS will validate the certifications. So your valuation of the asset will eventually be impacted if you're doing greenwashing. So it's a very important one to make sure you get it right.
Wonderful. Sean, any quick advice?
Look, when everyone from SBI Mutual to IFC to Amundi and AXA and Allianz is saying, give us green, there's an opportunity. You've heard today how simple it is, how can it be simple? You're mad not to look at it. If you're even close to this idea, have a close look.
Thanks. And finally, Eleni?
Yeah, I think a question I hear a lot of is, can I afford to build green? I would reframe that question of, can you afford not to? When inefficient buildings are more expensive to run, harder to sell, and risk becoming obsolete and limit your ability to access finance. Green buildings are not a cost, they are a performance investment.
Wonderful. That's really great advice. And I would now, if we have time, open up for some questions from the audience. So I hope there are mics to go around, but please just raise your hand and we'll have the mic come over to you. And if you could introduce yourself, your organization, and if you are directing this question to anyone specific, please let us know. So we have one question there.
Hi, good afternoon. My name is Soumya. I'm from Signature Sattva. My question is to all the panelists, and I wanted to start by directly asking Ms. Anjali. You mentioned that the specific fund works on sustainable, low-income and mid-income housing. So my question is generic, where ESG, environmental social governance, S stands for social housing, which is your low income or mid-income. So my question to you panelists, for specifically HDFC and IFC, would be, the social housing is being shifting towards tier 2, tier 3 cities in India. There's a lot of push towards that. Yet the institutional fundings are very hesitant to invest towards tier 2, tier 3 cities. So do you see a roadway where you guys are evaluating essentially to invest towards tier 2, tier 3 cities, specifically for low income or mid income housing?
So just a clarification, the way we look at housing today, we know the world has the haves, the have-nots, and the have-lots. Now, if you look at the real estate market, the have-lots have been dominating with luxury housing. At the have-nots, you need subsidized funding. It's the haves that seem to be without solutions at this point in time, and they don't need subsidies, but they need something that could be, affordable has got construed because there have been so many different definitions that have come out, but we're just looking at an average middle-class person with a salary between about 50,000 to about 3 lakhs is the sweet spot per month I'm talking about. That's the sweet spot. I think what we are looking at is to reiterate that green housing does not have to be premium either. But we're not talking about subsidized housing at this point in time.
Well said.
Rag, do you want to take that?
No, I'm okay.
As said, finance will follow where the development goes, right? I mean, if there is credible development coming up, I don't think there is any aversion, just that if 70% of supply is coming up in 6 places, that's where the funding is going to land up eventually. I mean, finance by itself can't create demand.
And from IFC's perspective, we don't invest in luxury housing. Our primary target is affordable housing. And again, that definition varies according to the city and location. And we have gone down to the level of PMAY housing as well. So we are even funding some EWS housing across the country through housing finance companies. Any question? Any further question? All right. Thank you, everyone. Thanks to all the panelists and thanks to the audience.